please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The revenues from operations for Coal India have come in at about 26,900 crores versus 24,850 odd crores. The stock is actually falling now, so let's just wait by for our team to put the numbers out. The profits have come in. Okay, there's a big fall in profits actually. 1295 crores is what the company has posted this time versus 2718 crores on a year-on-year basis. So there is a big fall as far as the profits are concerned. I think 1295 crores is well below our estimates as well. So yes, our estimate was 4650 crores. Yes. There's a huge fall, Anuj, in the profits.
Yes, I think that's again a bad number, and as it happens towards the fag end of the earnings season, you normally see this kind of numbers. So of course, for companies like Coal India, the revenue number does not make any difference, because at the end of the day, it's a commodity company. What you're looking at essentially is the net profit and EBITDA number, and that does not look good. So the stock, we'll have Nigel also perhaps telling us what went wrong here in the quarter, but 3% lower is what we have on the stock on account of what you're seeing right now.
Oh, absolutely. Just waiting by for the EBITDA number as well. But this time around, not just as per our poll, but even if you compare it year on year and quarter on quarter, there's no exceptional. So it seems to be a pure operational miss. 1295 crores this quarter compares to 3000 crores of profits last quarter and 2700 crores of profits the year before. So I think this is the lowest we've seen in last many quarters in terms of profitability for Coal India. Ambrish, any quick thoughts on this stock? Have you liked it at all?
I mean, see, earlier we used to look at it from a dividend perspective, because it was a good dividend yield play. But with these sort of numbers, I doubt whether we can, Coal India can actually maintain that sort of a dividend even going ahead. And anyway, it's been like a underperformer. So I mean, I really don't think it should be bought even at these levels right now.
Okay, so we'll try to get some reactions as well. But for now, what you're seeing is quite a bit of downtick on the stock. That's of course, Coal India down about 2%. Nigel is also with us. Nigel, tell us what went wrong. We, of course, are looking at net profit, which is at 1295 crores.
Yeah, I know. Just taking a look at that number as of now, just trying to see whether or not there is any kind of one-off in those numbers, because these numbers look very, very disappointing. A couple of numbers, a couple of expenditures that have come in there. Pull up the employee cost. Employee cost is at around 16,000 crores. Now that compares with around 9,000 crores approximately. So that's one reason. I think they've taken some kind of a hit out there. So I think we should highlight that number as well. We should bring that up for you. Just take a look at that. Employee cost is around 16,000 crores on a sequential basis. It compares with around 8,700 crores. And on a year-on-year basis, it compares with around 9,200 crores. So that's not good news. That's one of the reasons that in fact these numbers are looking fairly disappointing. And I think that's the reason why in fact these margins have taken such a big hit. So we'll have to see whether or not there is some kind of one-off in these numbers, because otherwise the top line is looking okay, fairly decent, and the bottom line is compressed only because of this. The top line in fact is a little better, but on a like-to-like basis you'll have to see how much of that was e-auction sales, how much of that was FSA sales as well, and how much of that was grade slippage. Remember, tomorrow they're having the analyst meet for the first time in Bombay itself, so some part of the street is expecting a good set of numbers actually coming around this time around. I'll just have a closer look at this and I'll get back to you.
Actually, the stock is recovering now. A commodity company, so of course, it's sometimes results can be all over the place. 282 is what we have. Jatin Damani of Kotak is with us for a quick take. Jatin, good afternoon. I'm, primary look at the numbers. Your thoughts?
So yes, primarily looking at the numbers, yes, numbers were below the estimates. It's largely hit by the employee cost, what we believe. And that's the same case going on to the entire PSUs because of the provision that they have to make on the actual provisions and on the gratuity front. I guess that could be one of the reasons why the underperformance has come.
Okay, yes, so the employee expenses actually have gone up quite a bit. So 166 crores is the employee expense this time around versus about 90 odd crores or so. That's a one-time expense that most of the industry has had to bear. But even stripped of that, it's quite a fall that we've seen in the profitability, right, Jatin? Coal India has not done much for investors in the recent past. Do you get a sense that it could continue to be an underperformer?
So, see, looking at the numbers, we need to closely look at the e-auction, FSA, and the slippages numbers that company will come out with probably tomorrow, or probably they'll come out with the press release. But that are the key things to watch out, whether what the e-auction volume and the prices and the great slippage. If there's a higher amount of the great slippages, then that could be the cause of concern going ahead as well.
All right, Jatin, you know, we have this stripping activity adjustment. Oh, there as well, it's around 2,400 crores. That compares with around 1,400 crores. Now, this is a non-cash expenditure, is it?
Right.
All right, so that could be another reason why. So we'll have to get clarity over here as well. So we may have to adjust it for that number. Two reasons, Jatin, why these numbers are looking disappointing. One is the employee cost. That's coming at around 16,600 crores. That compares with around 9,200 crores. As you told us, that could be some one-offs in this. And the second reason is that the stripping activity, over there, in fact, it's coming at around 2,400 crores. That compares with around 1,400 crores. So how do you read this then? It's a clear 1,000 crore increase only because of this.
Yeah, so definitely I'm saying the slippages has come down, and definitely there can be lots of the overburden that would have come on the plant while doing the digging activity. So that could be a couple of reasons which has dragged the overall performance of the
So this is
India.
a non-cash, just to tell our viewers out there that this is a non-cash expenditure actually, this stripping activity ratio that they have given actually at around 2,400 crores. So adjusted for that, the numbers will not look as bad as you know, the initial reaction was. And that explains why the stock is recovered from the low point of the day. Back to you, Anuj.
Oh yes, that's the reason. In fact, you know, as Nigel also said, we right now have only limited numbers. Let's wait for clarity on those numbers. For now, the stock, after seeing a downtake, is now actually recovering quite a bit. Just see the intraday chart of that stock. It's making a bit of a move at this point in time.